What's going on, everybody? It's your boy C-Zar, and we are talking about KTA, Keeta the Cheetah. Hit that like button, subscribe. Thank you all for being here, and let's get into it. It's the 14th day of January, and here we are on another, yet again, a voluptuous green day, green candle here. You're moving higher day by day, and you're moving at a faster pace day by day, too. I mean, very neutral, slightly exciting with the 6% move. Pretty exciting yesterday with 14%, and here we are today. Or I'm sorry, yesterday was 12%. Today is even more exciting with 14%. And maybe it gets bigger. Maybe it does get bigger from here. But I do expect, one way or another, we will be breaking out. We might even be in the midst of this move now that breaks us out and sends us dramatically higher, fantastically higher, all the way up to new all-time highs. It won't be a straight line like this. There will be trials and tribulations, but I digress. It's nice to see the price here at 31 cents. Okay, it's nice. This rounded bottom, again, coming in clutch, this kind of structure, it's very bullish. Very, very bullish. It would be bearish, again, and I flipped this so that if we ever see something like this, we can be better prepared for it in the future. This is a very bearish look, you see, right? We flip it here. Of course it's bullish. I mean, it's the same thing, but just that rounded bottom, it's the same for the rounded top. When you round off, it typically suggests that there is a shift in momentum to the opposite direction. Sorry. Let's see. We look at the high, we put it to the low. We've gone from the 236 down to the 069 perfectly, right there. Not a common interaction, but it does happen. There's a reason why that line exists. And you have a higher low there. Likely from here we move up to the 382, and we probably consolidate around there. Right, likely. That would be around 40 cents. And typically you do wick just above the 382, and then you close below it, typically. So wicking just above the 382, finding resistance there that makes sense. 43 cents sounds about right. Prior support, prior resistance right at the 382. I mean, this area makes a lot of sense for us to go to. I think that's where we're going to go. That's been the assumption since this move began, since before this move began. That's been the assumption. If I'm wrong, and we don't stop there, it's only because we went higher, and we went all the way up to the golden ratio in one fell swoop. And maybe we go to 68 to 80 cents, maybe. And in which case we would see a slightly higher high. We would see a slightly higher high. And we'd probably consolidate from there and then continue to move up higher. And I would expect if we do run all the way up to the golden ratio, we would see some intense volatility. I mean, we'd literally go from 68 to 52 cents at a minimum. And that's pretty volatile in itself, let alone back down to 40 cents. I doubt that if we got up to the golden ratio that we'd go below 40 cents again. I'm sorry, guys. I'm sorry. But I got to deal with it. You got to deal with it. 31 cents now. The expectation is 40 cents. Let's look at the short-term stuff, and then we'll zoom out from there. Okay, 1 hour time frame. Looking at this. And I say 40 cents. It's like 40 to 45 cents. Be open-minded, right? Don't be so rigid. Don't think of it as like a specific level that needs to be hit. Think of it as more of an area, probably. Hold on. That one I tried to save you guys from. 1 hour time frame there. The RSI looks pretty damn good. I would say. Looks pretty damn good to me. Higher lows, higher highs, uptrend. You are overbought. You're getting there, right? I mean, you've been in this trend for quite some time, and it's nice to see you are overbought. You look strong here. Yes, there's bearish divergence, but you look super strong here. You can keep moving up. This bearish divergence can extend or absolve. I mean, if we go above 90, there's no more bearish divergence, right? It's like here, you had bearish divergence until you didn't. Here, you had bearish divergence until you didn't, right? Same thing here. We might have bearish divergence here, but in a couple hours or in a couple days, maybe we don't anymore. Stochastics look good. The MACD looks great. It looks like we're just getting started, right? We had a false cross. Now we're building here. I actually really do expect that this next run might be where we top off. So we really will. I think we are just going to run straight from here, 31 cents, all the way up to this 40 to 43 cent zone. I think it's going to be very fast. I mean, I'm talking about we got 4 days left in this week. I think within the next 4 days, maybe within the next 2, it's going to happen very fast. I think it's happening right now. It looks really good, you guys. 4 hour time frame, super deep in the overbought zone. You look so good. It's happening right now. Yeah, it's happening right now. So it's nice that we're up 14%, but I do assume full-heartedly that we're going to move up to this 40 to 43 cent zone pretty damn soon, which from here would give us anything from a 30 to a 40% pump. Likely, I would think, I'm going to guess, over the next 48 hours. That's what I'm going to guess. That actually might be a really good short-term trade. Not financial advice, not a financial advisor, but if you bought here, with that being said, if you buy here, just understand you are buying something that over the last 4 days has gone up 44%. But if you buy here and you have short-term selling expectations, I mean, that might be a good play there. Sell, pull back to prior support for support, maybe buy back there and then rally. Because I very much believe that one way or another, whether we stop here or not, we will be going higher. And then imagine you buy here to sell here and it does go higher. Well, cool. Take those profits and put it in something that hasn't pumped yet. You know, like there's really no way to lose if you do it right. unless death happens. Daily time frame, the RSI just got overbought. When's the last time we got overbought? Because it has been a long time. It's been a very long time. I don't want to reference this point, right? I want to reference this point to a point that is more akin to it, like this point. Because here you had not been overbought for a while. You finally get overbought right here. We haven't been overbought for a while. We finally get overbought right here. Where this point, you just got overbought. They're very close together. You see what I'm saying? So I think this will have more merit to this point here. So let's analyze what happened here. What happened when you got overbought for the first time in about a month? Well, you got overbought. Let's delete this. Let's actually put a line right on it so that we know for sure we were overbought here. Well, you were at a relative high area. You did climb the next day a little bit, but you pulled back, right? If you sold there, you might have hated yourself for a day and then felt very smart for a few days. But the point being is that right here, when you got overbought for the first time, the move was not over. You had more move to go. Here you're about 2/3 or 3/4 of the way through. You had a little bit left to go. It's not like you missed a whole lot. And in fact, if you sold there and you never bought back in, you're probably really happy right now. But the point being, the move kept going. There was more to be had. From the high, from when we got overbought on the daily close there to the high there, that was another 36%. So imagine getting overbought now. You sell. Maybe there is some turbulence. We got another 36% move. That's basically exactly what we're calling for, is a 36 or 40% move. I just don't think this move's done yet. And here, I want to offer another thought too that extends this a little bit more. What if we don't do this and then this? We don't do this where we pull back and then this before we get to 40 cents. What if we just move up to 40 cents like I think we're going to? And then this all is our first kind of interaction with our overbought zone, right up here. So then we still have more to go after that. That's what I'm thinking. I'm thinking forward here, thinking that 43 cents, 40 cents is our next stopping point. But it's not a stop that will last long. We likely do persist higher afterwards, right? In other words, I'm comparing this move to this overall move here. And then we consolidate, and then the next movement up would be comparable to this here. And likely that would take us above this high. When I say comparable, I just mean in action. I don't mean in percentage form, right? The percentage, the growth will be different, probably. That will have little similarities, probably. High to low. Expectation is 75 cents, 84 cents. Oh, wait, no, I'm sorry. We don't want to take this high. We want to take this high. That is the all-time high, but I think this is the high that started the down move. I think this will be more respected. Maybe both of them are respected, but the 069 is a clear tell. I think that this is the one that we should use. The fact that we respected that so well. So, golden ratio, 68 to 80 cents. That's what we have to look forward to after we interact here. We consolidate, we do our thing. We move up maybe. Maybe we're up at 70 to 80 cents in the first half of February. Maybe it's the second half of February, but soon enough. Probably within the next month and a half, we should be up there. And then as time goes on, I think as February and March develops, we should be pushing on to new highs altogether. I would think by the end of March, maybe sometime in April, we're up at this area here, $2.83 to $6.04. It depends on how all this happens, but if it goes the way I think it will, we should see this by the end of Q1, if not Q2. And from here, from the current price, that's anything from about a 9x to a 19x potential. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. Take care of yourselves. Bye-bye.